Hi, folks. Today's the 3rd of July, the last trading day of the week. Tomorrow is a holiday, so let's see what the market's doing. Great jobs number this morning. Much better than I expected. I thought it would come in at least flat, but it actually came in better. So unemployment rate is at 4.1, actually went down. I think that pretty much confirms that Fed is not going to cut in July. There's one more key data point, which is CPI. And CPI, while it may tick up slightly, I don't think it's going to be enough to make any difference. So I'm pretty sure the Fed will probably just stay where they are with the next rate cut coming in September. So I think that's the expectation the market will have as well. So it shouldn't make too much difference, but the market loves what they saw today. And heading into the long weekend, so far at least, it's 11:37 a.m. East Coast time. So far, the market is looking really good. We'll look at that in a second. So as always, I'm not a financial advisor, so this is for educational purposes only. Let's take a look at on the charts page for those that are subscribers. On the left-hand column are the 10-minute charts. And you can see that we gapped up in the morning, continuing to go higher. So kind of flattened out a little bit, but really not rolling over. So we are continuing higher. Let me make this a little bit bigger. There you go. So here's the open, Monday's open. And technology continuing to move higher, financials going sideways, discretionary actually kind of down a little bit. I wonder if Tesla and Amazon make up over 40% of this sector. So we'll take a look at those in a minute. Communication services down also. So that's where Google and Meta are in that group. And then industrials kind of flat. So it's technology really that's leading the market higher. It's the largest group within the S&P, 33%. So that always will push it up when that happens. Let's look at the defensive side. And you can see healthcare is down, staples down, energy down slightly, utilities flat, materials down. So definitely the rotation is out of defensive and into aggressive, mostly technology. So all of that is moving the market higher, and it may just continue actually, because there really isn't anything surprising. The economy is doing well. Tariffs are really not having much of an effect. I've always said that they are not inflationary, and that's being proven out. There's lots of liquidity in the market. I'll show a graph on this weekend's newsletter where global liquidity really drives the market, and it's way up. It's about 11 or 12 week lag period. So we could easily hit that 7,000 that I talked about. Anyway, here's the rotation. So growth versus value is up. Discretionary versus staples up. Technology way up. Semis up slightly, and internet up slightly as well. So that XLC may be Meta that's causing that. Actually, both Google and Meta are in the internet industry group. So anyway, the market's still higher. Let's see how we close today, but it looks like we're going to be okay. We'll close okay. By the way, this is a short squeeze stock that hit. You see right there. So short squeeze. This is on the short squeeze list, which is on the website for those that are interested in seeing all of the charts in the short squeeze list. Just go to the chart lists and scans page for subscribers, and you'll see down here, here's the short squeeze candidates. This is updated every weekend. This week there are 47, there were 49 last week, but this is one of the stocks that are in that list. So it needs to have more than 20% of its float needs to be short, and average volume 250,000 shares. So it has to be liquid, has to be a U.S. stock. We want them to be optionable, but these are actually all the stocks right here. So if we look, and this is the one that gave a signal right at the end of the day yesterday. So you can see all the volume right here. So it actually, the short squeeze began right over here on June 26th, and it actually hit the scan that day also. If we go back and look at this a little bit further back, the important thing about short squeezes is shorts don't start to feel pain until it gets above where they shorted. And right in through this area right here is where most of the shorts probably came in. I can actually put in a price channels. Oops, that's not what I wanted. I want, what do I want? Volume by price. So this will show you where most of the volume is. I'll turn that down a little bit. So you can see right here, most of the volume is down here. There's also a lot of volume in this area right here, from here down to here. So right through this area right here, you can see the red bars. That's where most of the shorting is likely taking place. So there are shorts down here that started to cover, but the majority of the shorts are right up in this area, right where we are right now. Once we got up above this level right here, that's where the shorts starting to cover. So there's really not too many up here. So right where we are right now is where the short squeeze happens. That's where all the shorts are starting to feel pain. And in order for them to get out of their positions, they have to buy. So that pushes it up. So this might continue for those that like to take a risk and try out short squeezes. That might be one. It's only an $11 stock, so very low priced as well. It's in the industrial suppliers, industrial group. So it might be a good group to be in. You can see it's at the extreme. It's hit the extreme once before. It hit it again today, yesterday and today. So we'll see if it continues to go up. Anyway, that's a short squeeze stock. One other one that someone wanted me to look at was Affirm. Here's Affirm. You can see it's had a really good run. If we look at it on this one here, really nice upward trend. Keeps coming back to key support levels and then bouncing and going higher. So the first entry point was back here in April, as most stocks, the beginning point was in April. So remember that next time we have a big sell-off, because these are the ones that'll hit the scan. And those are the ones that are the best opportunity to get in. But there are other opportunities as it moves higher. Right now, it's sitting right at a resistance level, might break through. So Affirm actually looks really good. It looks like a good stock. Can't tell you exactly where to get in. It's up to you. To do that, you might wait for it to come back to the 21, somewhere around there. But no telling if that'll happen. It may not come back to there. All right, let's take a look real quick at the scans before I get into something else that a subscriber asked me about. Two things, actually. First off, this is Micron. So Micron is starting to move higher. I showed you that a couple of days ago. It actually had a hammer right here. There's a hammer candle, which is usually a bullish reversal. So it is reversing and going higher. So that may continue. Let's take a look at, we'll just do these very quickly. Momentum scan. Those are the ones in here. Interesting. Donald Trump. His site, Trump Media, it's starting to move quite a bit, actually. So it was down here at 1750. It's at 19 today, moving up. So it's up 4% today. So this is the green bar right now. So that's why it makes the scan. So green bar with 3 not green ones previously. So it is just beginning to move, and the 5 is just crossing the 10. So everything's lining up for this. This one could go high pretty quickly. I don't know if this is on the short squeeze list. It could be. I suspect there probably are lots of shorts on this one also, but it's just beginning. Lucid is the other one that looks pretty good. You can see it's in a squeeze right now. There's the green bar right there, right at the 21, and momentum is starting to move up. Fluor, this is a nice upward movement for the stock. This continues to go higher. Momentum is still way up there, but in a extended run like we've had in the market, these are strong stocks. Nothing else there that looks interesting. So let's take a look at the optionable stocks. These all have weekly options. CRM is on the list. DocuSign is on the list. Looks like it's starting to move. Fastly's on the list. You can just look over here. You can assume that it's a green bar Actually, these aren't based on the green bar. These are based on closing above the 21. So it's a little bit different scan, but similar. So it's closing above the 21, but you can look at the candle over here and see what it looks like, and then look at the momentum indicators, the RSI up here and the MACD right there. So this one is just crossing above all of its moving averages. Fortinet, sideways movement, trying to break out. Coca-Cola, MasterCard, MongoDB, technology. So technology stocks are starting to move up. So MongoDB is making a move. Palo Alto Networks starting to move. Palantir coming back to life right now. So it might be starting to move up. Toast, the restaurant stock. Twilio. Both of these are sideways movement. This one was in a squeeze for a while. Visa is on the list. And Workday. Workday is just beginning to move, and Zoom down here. So those are a lot of those are technology stocks. You can decide if you want to trade those or not. Let's look at the Magnificent Seven, which are the large cap. And we've got two of the same ones, Salesforce and Palantir on the large cap stocks, and the IBD list. Let's see what's there. It's also two of the same, Palantir and Toast in this case, on the IBD list. All right, one question that came in from a subscriber is, he had asked, and I answered it yesterday or the day before, about how do you show options? You can see, or rather earnings. How do you show earnings on the chart? And you can see here, the earnings are right here on the chart. This is ACP. This is Stock Chart's advanced charting platform. And there's some things I like about this, and there are some things I like about the standard platform better. But one of the things I like about ACP is that you can put different chart styles side by side. Can't really do that on the standard stock chart. So I can put different ways of looking at this side by side with each other. So I like putting the Keltner channels over here. I like putting the squeeze over here with the ADX line. And on the left side, I like putting the RSI, the MACD, the moving average lines, and the force indicator. So this allows me to put them all basically right there. I can see everything. You can see the earnings up here after the market close, but it also puts the earnings right on the chart for you as well. So the question that this person asked today is, okay, great. Now teach me how to put all of the charts that you've given me in the standard platform. How do I put those charts into ACP? Well, you have to learn ACP. So there's a little bit of a learning curve involved. You also have to go over and recreate your charts by using the components that the pieces of ACP over here that allows you to put your chart settings in, save your chart templates, put annotations in, create layouts, things like that. This is a layout right here. In this particular case, this layout is two-panel layout with Force and Keltner. That's what I call it. But I can have other types of layouts like this. So this is the one that I like to use right here. And you can create multiple layouts. So you have to actually go in and create that or set it up. However, if you are a subscriber to my website and also a subscriber to Stock Charts, down here I have some of my ACP formats. This is on the chart lists and scans page. I also have some sample scans. I've got my favorite chart styles over here. You can see when they were last updated back in April. I'm going to update these tomorrow since the market's closed. And I just updated this one. So to answer this person's question, if you just want to use the one chart, this is a 9-month daily chart. All you have to do is come over here, click on this right here. And now you have that chart style. So now you have the squeeze down here, the ADX line. You've got the MACD up above. You have volume, and now you have not only earnings, but dividends as well. So what this person wanted to do was to see what the action was around earnings time. So this is Micron. You can see in this particular case, it went sideways into earnings. This case, it went sideways into earnings. This case, it went up into earnings. So, but this does tell you what typically it does. Now it's got some moving average lines. It's got a 5, a 21, 50, and a 200, which are my default moving averages. It has a squeeze down here, and it has the ADX line with the 25 line right across there. So if the green one is above the red one and it's above 25, then it is bullish. The blue line tells you the strength of the trend. It does not tell you the direction of the trend. So you look at the green and red ones for that. So the blue line says the strength of the trend is strong since it's moving up, and it is bullishly strong because it's the green one that's above the red. If we go back here and we can see right here, this is moving up. The blue line is moving up, which means the strength of the trend is strong, but it doesn't tell you what the direction of the trend is. But because the red one is above the green one, the strong trend is bearish in this case, and you can clearly see that it is bearish. So that's the way to use the ADX line. And I just like to use 25 as kind of the midpoint. Above 25, usually the trend is pretty strong. All right, so anyway, this is the chart list that I created. You can download it, and then you can go over here and under chart templates, you then save chart template, you give it a name, and then you have your own chart template. You then can use this template to figure out how I created this stuff by going over here to chart settings, and it will actually show you the chart settings right over there on the left-hand side. So these are all the chart settings. You can click on these and look at what the parameters look like if you want to create your own. Or if you don't want to bother with it, then just use this template. You can create your own watch lists, like over here. So I have, let's see, let me pick a good one. Let's say, I don't know what's in this, my watch list. Here's AMD. So you can create your own watch list, and actually in this case, it's just going to use the chart that it had previously. If I go back, anyway, that's how you can do it. I'm not going to explain the rest of it. It could get more complicated. But anyway, just click on 9-month daily chart. I'm going to update the rest of those later on. And there's the chart that you can use. You can then put in your own symbols up here if you want to. Eli Lilly, if you want to look at that. So there's earnings for Lilly, NVIDIA, which usually runs up into earnings. So here's earnings, here's the run up, earnings here, here's the run up, earnings right here, here's the run up, and it's just continuing to go higher. It also shows you where the dividends are. 1 penny dividend for NVIDIA. So anyway, that's one easy way that you can do it. All right, the last question that I want to get to, and let me see if I can find this. Yeah, here we go. All right, so this person is asking, this is from RJ Green, 42. How do you keep from getting stopped out on a big change in the open? Example, look at HIMS, HIMS, on 6/26. This was the day that he posted this. At the open, it's way below market, triggers my stops, then shoots back up, but I've sold for a loss or lost out on a major upward move. I'm setting stops according to the risk calculator, but still get knocked out when I don't want to on a quick reversal, usually because it's gapped down at the open. So there's lots in this to talk about. First of all, gap down at the open. The open always is very volatile. Market makers will look at what their book shows them. If they have lots of buy orders and they don't have enough in their warehouse, they don't have enough stock to satisfy the buy orders, then they'll go down and take out stops that are close to where the price is, and then replenish their warehouse, and then they're able to sell those to all the people that want to buy them. So that's why it gaps down in the morning, gaps down at the open. Usually the first hour in the morning is when this kind of volatility happens. Many call it the amateur hour. So traders that try to get in or do an entry at the open, many times it'll get reversed. So that's why this happens sometimes. In this particular case, that may have happened. We're going to look at HIMS here in a second. So that's one thing about setting stops. The other thing mentioned is the risk calculator. So the risk calculator does not tell you where to set a stop. It only requires that you have a stop so that it can calculate what your position size should be. or in other words, what your risk should be. And I'll show you how that works here in a minute. So let's take a look at HIMS and see if we can tell what you're talking about. So let's go to HIMS and let's go to 26th is right here. All right, so that's this big white candle. So notice, let me zoom in. Let's go down to 1 month. So here we are right here. So here's the 26th. So notice the day before, the close was 41.41. Now, I don't know where you set your stop on this, and I don't know if this is the day you wanted to get in or if you got in back here. If you got in up here and then set a stop down here, I don't know what the specifics are. You didn't explain that in the note. But let's assume that you're watching HIMS and you see that it has a big decline. So you jump in somewhere around here. Let's say somewhere around 44. Let's call it about 44, right about there. All right. And you watch it go down, and the next day it doesn't really go below that level, goes up a little bit. The next day it does go below there. So it goes down here to 41.50. So you say, okay, well, the low on that day was 41.20. I'm going to set my stop at 41, just below the low. Well, the next day, the low was 40.88. So your $41 stop got stopped out. And look what happened right after that. It started to zoom higher. In fact, if we look at this on a 10-minute chart, and in this case, we need to capture the 26. So I'm going to go back a little bit. Let's go back, let's say 9 days. Okay, actually, let's go back 10 days. Go back 10 days, and now you can see the big gap down right here. If you got in down here at about 44 would be right there. So 44 would be right in here. This is just an assumption on my part. By the way, these are the volume bars over here. So you can see the negative volume is red. It shows you what price level that volume, all that volume is at. Let's say we got in at 44, and then we watch it go down. Didn't go below 41, so we set a stop at 41. So the stop would be right, 41 is right about there. It's almost at 41. And then this one right here goes to 40.88. So here's the 26, the open on the 26th. So one thing to notice, let me actually draw a line here. I'm going to put a horizontal line in right down here at 41. Right about there. Let's actually put it up here where it looks like this low was back over here. So that's 41.93. So basically there's 42 right there. So let's say you put your stop right there, 42 or maybe 41.95, because that's where it looks like it keeps going down to. So you say, well, that looks like a pretty good place to put in a stop. Well, guess what the market makers do? They know that everybody has their stops probably down here between 41.50 and 42. So the market makers see that there are lots of people that want to buy this the next day because they can see the orders. So they can see a lot of buy orders, and their warehouse is empty. They have to replenish their warehouse. So what do? They say, oh, we think. They don't actually see your stop order. A lot of people say, oh, they can see my stop, so they take me out. Well, they don't really see your stop. They just know from psychologically where most people put their stops. And they'll try to put them very close to where the bottom right here is. Usually that's a mistake to try to put it that close, because market makers will put it down, send it down, take out the stops, grab your stock as well as everybody else's, and then start selling it to all those buy orders that are lined up that they don't have enough stock in their warehouse to satisfy. But now they do, because they took out all the stop orders. So that's what happened right here. And then of course you get stopped at, if you bought it at 44 and you get stopped out at 42, so you took a loss, and then it screams higher. So you don't participate in this big upside right here. So how do you prevent that? Well, first of all, you can't completely prevent it. However, what you can do, if we go back to Let's go back here. The 26 is over here. If you saw this big gap down and you got in at 44 and you're thinking, where do I set my stop? Well, there's a few ways you can do it. 44 times 0.93. So according to IBD, you can set it about 7 or 8%. So 7% would put it at just below 41. Okay, remember the low right here is 40.88, and 7% of 44 is 40.92. You would still get stopped out. So that's probably too close. So you want to give it some room. You want to give it, and also keeping in mind what market makers do, the kind of tricks they play on you. Especially when you first get into something like this, you want to give it some room to move. So put your stop even further down, even though you may take a bigger loss if it actually goes there. You have to be prepared for that. The other thing you can do, which I like to do, is wait for a blue bar. Wait for something that's not red. So you have a big gap down, you got 3 red bars. So I want to wait for a blue bar. In order to get a blue bar, you got to wait for the close. So let's say we bought here at 44. You can either buy there at 44 and then wait for a blue bar and then set your stop below that. Or you can wait to buy until you get a blue bar, which means you're going to buy higher. In this case, you'd be buying at probably 46. So either way, wait for the blue bar, blue or green, anything except red. So blue means neutral, red means the trend and the momentum are down. Green means the trend and momentum are up, and blue means neutral. One of those two things is different. So that's a couple of ways to do it. Number one, don't get in until you get a blue bar. Number two, get in on this downtrend right here, but wait to set your stop until you get a blue bar. The other thing you can do is if you use the 8% rule on 44, then it's at $40.50 down here, and you would not get stopped out. So 8% would do it too. So now let's take a look at the risk calculator and see how that would work. So here's the risk calculator. And by the way, for subscribers, the risk calculator is on the web page. It's a little bit hidden, but if you go over here to the More button, you see right here, Risk Calculator Download. And you click on that, and it brings you to this page. It shows you what the latest version is. And click on this button right here, and it will download it into your downloads file. And then you can open the risk calculator from there. So I already have it open. So I'm going to show you how this works. So I put 7% in here just as a default, but you can change it. You can make it 8% instead. In this case, we're looking at HIMS. So I put the stock up there. Let's say my account value, my account total is, I don't know, let's make it $50,000. $50,000. All right, and then you need the ATR. So the ATR, which I showed yesterday on Technical Tuesday, I believe. But if you look at, where's HIMS again? Down here, HIMS. So if you look at the default setting right here, the ATR is right down here. It's 4.84. So 4.84 is the ATR, the average true range. So I put that in right there because I need to know what the volatility of the stock is. Every stock has a different volatility. Another way you can find this is just put the symbol in here and just click on this click here button, and it will bring up FinViz, and FinViz will show you what the chart looks like. It will show you some trend lines, and it will also down here show you the ATR. Now the ATR changes every day, but right here, ATR 484, just like I said. So the ATR right now is 484. That will change slightly every day, but for this purpose, that's a good one to use. So now I've got the ATR in here. Now one recommendation it will give you, so let's put in here the price. Let's say we were buying at 44. All right, one thing that it will do is it will take the average true range, you see right here, and down here it will take 2 times what that average range is. So remember, with the average true range, If we go back to HIMS over here and look at it on this view, so these are all the ATR bars. So the green one is 1 ATR, the blue one is 2 times, the red one is 3 times. So if we want to set a stop down here at the 2x, 2 times the ATR, that would be down here at this level down here. All right. And it would have been different back here. So probably would have been a little bit lower. But at any rate, it will calculate that for you. So the risk calculator says 2 times the ATR is 34.32. So I put 34.32 in there. All right. So now I'm taking a 22% loss if I use 2 times the ATR, but I can buy 50 shares at that level. I'm going to get rid of this. Is assuming we want to leg into it half at a time, 50%, but I'm going to take that out. You can take these out and put your own numbers in. So we'll assume that we're just going to buy it all. At 8%, then it's $40.48. All right. And then in this case, it's 70 shares you can buy. So now you might want to look at the chart and say, where do I really want to set my stop? So the risk calculator is not telling you where to set the stop. You have to figure that out. It is giving suggestions on potential places to set the stop. In this case, the ATR means that there's a lot of volatility in the stock, especially after that big downtrend. So that's why it's setting it way down here. 2 times the ATR is way down here at 34. But if you do 8%, it's at $40.48. If I do 7%, that was in there is $40.92. And remember, it went to $40.88. So that would stop you out. So you might want to use 8% in this case. So again, you want to look at the chart, see what the chart looks like, make a decision. $40.92 is right there, right exactly at the low. That's not much room to move. And the low on this particular day was 40.88. So you probably want to go lower than that, maybe somewhere in between these two ATR lines, which would be about $38. So then you can decide where to put it. Putting it at just 7%, because remember, 44 is where we're thinking of getting in, way up here. So 7% puts it way too close, makes it easy for market makers to take you out and replenish their warehouse and then move up without you. So what I would do in this case is not put it that close, maybe use 8%. Now it's at 40.48, or use just look at the chart and figure out, somewhere in between here, somewhere around 39. And if we use 39 in this case, I can actually manually put in a number right here, 39. Now I'm losing 8%, but I can still buy the same 70 shares. So notice when I was losing 22%, it wouldn't let me buy the same number of shares. I can only buy 50 shares at that stop level. So it will prevent you from losing too much money even if you set your stop too low. That is the risk part of the risk calculator. It determines what your position size should be in order to keep you safe. So in this case, at 8%, I can buy 70. Or if I go to $39 for my stop, that's 11% I would lose, but I can still buy 70. All right. So again, if I go down to $34, now you can see it's 22% I would lose, but I can only buy 50 shares. So that's what the risk calculator does. And you can do it on multiple accounts. You can do it on multiple stocks. You can analyze different ways, different things, different stocks, play around with it and see what makes sense for you. But this will keep you safe. This will keep you from blowing up your account, losing all your money. Yes, you will lose sometimes, but it at least helps you to determine, to keep your losses at a minimum. There's also a way that you can determine where your exit would be if the stock starts moving up. That's right in this little box right here. And each one of these has an explanation. There's a little triangle that explains every single one of these and teaches you how to use it. But setting the stop is up to you. The risk calculator does not tell you where to set the stop. It only gives you suggestions on where to set it. So next time you want to set a stop, keep in mind what market makers, little tricks market makers like to play. They know that, if most people are setting their stop right down here at these 3 lows, the bottom of these 3 lows. So this low was 41.20. So most people are saying, I'm setting my stop at 41 because it never got that low. Well, the market makers know that that's where most people set them. They don't see your stop, but they know that's where most people are going to set them, especially on a round number like 41. And a lot of people will try to trick them and do 40.95. Well, guess what? They went down to 40.88 and took that one out anyway. So just whenever you get that close, just remember market makers like to do that. They'll move it down, take out the stops, and then satisfy all the buy orders, which sends the stock higher. So hopefully that helps you explain that a little bit. So setting stops is an art. You get better at it the more you do it. I highly recommend setting stops to keep you from blowing up your account. Don't worry if you get stopped out of something. There's plenty of other stocks, and I hope that has become very clear when I do the daily scan. There are plenty of other stocks to find. You don't have to fall in love with any one stock. There's lots of other ones out there. All right, hopefully RJ Green 42, that helped explain that a little bit, and also how to use the risk calculator a little bit. By the way, the risk calculator by itself is worth the $99. You need to have an annual subscription to get it. The monthly subscription will not get you access to it. It's right here on the More button and risk calculator download, and it will download the whole thing for you with, and it's got little explanation and training. It's actually built in how to use it. Or you can send me a note and I'll help you learn how to use it. But the risk calculator can really help save you from blowing up your account. As you get better and better, as you learn more about trading, you won't need it as much. Sometimes I still use it to figure out where a good place maybe to put my stop or how many shares I should buy. I'll still use it for that. But in general, I can kind of calculate that on my own now. But in the beginning, this more than anything else kept me from blowing up my account and then not ever being able to trade again because I didn't have any money. So highly recommend making sure you have a risk strategy. That's part of setting up a trading plan, is knowing when you're going to get out, when you're going to set your stop, and when you're going to take a loss, and also when you're going to take a profit as it goes up. You don't want it to go up and come all the way back down again. So all of that is part of risk management and a trading plan. All right, that's it for today. Probably a little too long, but tomorrow I might do a video tomorrow since the market's closed. We'll see. I'm going to update everything on the website tomorrow because I'll have plenty of time. And let me know if you have any questions. Please like and subscribe. And let's see what the market's doing right now, just out of curiosity. Go back over here. And the market bias matrix page, there's the S&P. Still going higher. Look at that. It's going right up towards the expected move. So it is just zooming higher. Really love that employment report this morning. So what do you think? Will my prediction over here on the charts page, we'll look at the Santa rally that I put on here at the very beginning of the year. There's where we are. So Santa rally, I said, 2 out of 3 of these were positive. That means the market will end higher than it started. This blue line here is where it started. Clearly, we are higher. Can we make it to 7,000 by the end of the year? Well, we're almost at 6,300 already. And at the low down here, we were at 48.35. So 4,800 to 6,300, basically 1,500 points in half a year. So can we do another 700 points for the rest of the half of the year? We'll see. All right, looks really good for today. Hopefully it will complete and end that way at the end. Hope everyone's doing well and have a great 4th of July, Independence Day, wherever you are. If you're not in the US, then celebrate anyway. Just celebrate freedom. How about that? Thanks, everyone. I'll talk to you later, and have a great weekend. Take care.